Kia ora koutou. It's wonderful to be here in Te Waiponamu, and it's so good to see so many white males here. Represent. I noticed that I was coming after Dr. Hillman, and a few years ago I was asked to review a book, and it kind of, I hadn't really reviewed a book for a long number of years since secondary school, and even then I wasn't really that good at it. But I was asked to review a book, and that's when the Imposter Syndrome thing starts to kick in, right? So we have this chart between confidence on the left-hand side and competence on the right-hand side. And generally, as you go through your career, or as you gather a certain skill, or as you're accompanying your journey, you go through this sort of wobbly line where sometimes you're a bit overconfident, and then reality strikes, and everything goes to custard, and then you're a bit underconfident, and then something good happens, and you go above the line, and off you go. Now, the book I was asked to review was actually Dr. Hillman's book, The Imposter Syndrome. And I was asked by Radio New Zealand, can you review this book for us? And I said, sure, I can do that. I'm a white male. I went to a private school. I'm in my 40s, now 50s. I'm bald. Went to an Ivy League school and got an MBA as well. I can do anything. And the first point I want to get across is you can do anything. And in New Zealand, we tend to be in the red line, the one underneath, where we say, well, I'm not sure we can deliver that product to you because we haven't developed it yet. Or I can't do that because I haven't done it before. Or I can't sort of talk about doing that because that will be bragging, and that's a bad thing, right? Especially here in Christchurch and in the South Island. And so one of the things about investing, though, is that people tend to operate when they come and talk to you, they tend to operate on the top of that line. And you tend to get a lot of these people. They come in and they think that the company that they're representing is the next Facebook, Cisco, Google combined. And so what I want you to do is to find someone who you don't work with, who is not in the same company as you, just next to you, right? Just pair up. Okay? Find someone. Everyone's got to find someone else. One other person. If you're sitting on your own, then move, right? And go find someone who's on their own. Say hello to each other. And now the person who is more on this side of the room, okay? So the person who is more on this side of the room is talking to the person on that side of the room. And what I would like you to do is tell that person about the company that you represent and or your startup or whatever it is. Keep the company consistent. But I want you to do it in a way that is really on the bottom of this line, right? So just really underplay what it is that you do. Okay? You've got 15 seconds. Go. And stop. Okay, what did we hear? What did you hear?
She's got a company that just develops websites.
She's got a company that develops websites. Okay. Any other ones? What did you hear back there with the beard?
He works with data.
Oh, he works with data, and behind?
He does 3D stuff.
He does 3D stuff. Okay. Does anyone want to invest in the company that has heard about? Great. Okay. So now you can guess what's going to happen, right? It's going to go the other way. And I want you to channel your inner American. And with apologies to Dr. Hillman, who's not at all typical. He's chosen to live here. And my mother actually, she gives insults pretty well. And her best insult to me ever was, I've always thought you were very American. And that was after living in the States for 5 years. And Americans tend to be a bit, maybe sometimes too good at bragging about what it is that they do. And New Zealand is not good enough. So I'd like you to channel your American, go a little bit nuts, go over the top, it's okay, right? And hit the blue line and tell the person on that side all about the business that you're here either representing or starting up or whatever. And you've got 20 seconds from now. And stop. And stop. Okay, what did you hear?
That his company destroys stuff stuff to make it better before you sell it on to another company.
His company destroys stuff to make it better before selling it to someone else. Okay. Who was here? What did you hear?
That was a global business that was completely disrupted to the industry and going to take the world by storm.
Oh, fantastic. Global business disrupting the industry, taking the world by storm. What does it do? E-learning. Okay, thanks. Someone in the back over there? The two bald guys. Hi. So what did you guys hear? You heard a bunch of acronyms. Okay. But it's a bit more fun, isn't it, when you're sort of starting to brag a bit. Now, a lot of the work that I've done through NZTE for companies, helping them as they raise money, and it's probably been more like 200, has been helping them, what NZTE calls tell their story better. I call it understanding what the heck you do, who for, how you make money, and whether you're investable. And so what I want to do is walk you through a structure that you can use next time you're sitting next to someone in a big hall and you're trying to tell them about your company. And the idea is that if you use this structure, you can actually get a coherent message across that is going to help them make an informed decision about whether to invest in you, whether to buy your products, whether to ask you for more information, or whatever. And it starts with the end user. That's a person who uses your product. Then it goes to the customers. They're the ones who pay you money. How do you get them? The end user, that's all about your competitors, what your value proposition is, what your defensible niche is globally. The customers, what's your sales revenue engine? How do you grow your revenue? Because we want to see that growing revenue. The organization is how do you get stuff done? How do you execute, ship product? What's your governance structure like? What are the founders like? That sort of stuff. And then finance is what's your business model? I'm not really interested in your forecast as an investor because I know, and you know, it's bullshit. But what's your business model? Do you put $1 in and make $2 out, or do you put $1 in and make 80 cents? Right? And can you generate cash out of this business as you grow? That's the holy grail. Because then you never talk to an investor. If your company just makes money from the day one, you never have to raise money. It's great. And trust me, that's a much better place to be. So let's walk through this. At Red Seed, great local company. I'm not sure whether Anya and Glenn or anyone else is here, but great local company. At Red Seed, if you use Red Seed as a huge big box retailer, your same person, same store sales will go up by 12%. That's their proposition to their end users. And depending upon your gross margins and EBIT percentage, that probably means your earnings before interest and tax is going to increase by 40, 60, 80% if you put Red Seed in place. So forgetting about everything else about Red Seed, that's enough for me to say, there's something here. This is pretty awesome. If we can capture some of the value that we're delivering to our clients, we're going to grow really fast across the world. And we've moved into Australia, and we've stepped into that market, and then we'll step to the US at some stage. So that's your end user. Something compelling, something zingy that shows what it is that you do and no one else can. Revenue. Nothing but nothing beats a decent revenue growth chart. Maybe you do a cohort analysis like this one here from Conquer. Maybe you say something like, well, last year we tripled our revenue, and this year so far we've increased it by 80%. That's pretty cool. It's pretty hard to argue or discuss whether or not you've got a sales machine that works when you're coming up with that sort of number. That's the output evidence that you have. It's also a lot easier to talk to an investor when you've actually got a revenue curve. If you don't have one, then we're just talking science fiction. Then it's the people and the machine. And I'm choosing this time, for this example, Tabitha Coffey, who's just been appointed to Timely's board. Now, Tabitha is a world-renowned expert in hair and beauty. She's a reality TV star that goes into hairdressers and does a huge turnaround. Now, hairdressers, reality TV are things that I know nothing about. And I dare say that many of the people that founded Timely didn't know much about either, but now they've got someone on their board, and they've had other people along the way, of course, who really lives and breathes that ecosystem, understands the US market and business and how to grow that company. And that's something as an investor you look for as well. Not a bunch of people that all look the same on the board, but different people coming in from different angles who can add true diversity to the business and really understand the end user, how you sell, how you go into new markets, how you do your technology stack, that whole thing. And then finally, and points to whoever first guesses the company where this comes from, finally you look at the economic model. And this is where the details matter. This particular thing is on about page 35 of prospectus. And then you see this thing and you've got to figure out what does it mean. How does this company make money? Does it make any sense? And so you do need to have a bit of a finance head, which basically is just arithmetic. It's not that difficult. People that do technology can learn finance really easily. You need a bit of a finance head and assess whether a business is sustainable or not. And then assess whether your investment is going to make a difference to that business. Is it big enough? Is it small enough? And so forth. So, end users, who are they? What are the products and services that they're offering? What are the benefits that you're giving to those end users? What's that global niche you're dominating? I don't want to read all the bullet points on the slide. Instead of doing that, I want you to use this, right? Take a few seconds now, both sides, and use this to think about how you're going to describe to the person next to you your business. So you've got a few seconds now to write that down or think about it. Okay, that's long enough. Normally we'd do like 5-10 minutes in the table, that sort of stuff, but we don't have that time here. So what I want you to do is the person who spoke last, the loud one, I would like you to tell the person on that side of the room about your business using this structure: end user, customer, organization, finance, and you have 30 seconds. Okay, let's stop it there. Let's stop it there. And before you say that's not enough time, I mean, most of you heard about the elevator test, right? The elevator pitch, which is the ridiculous idea that you're in an elevator, and we used to use it at McKinsey, that the CEO gets in the elevator and you've got about 20 seconds to tell him or her what it is that you're doing, what insights you've found, and what your recommendations are going to be. And you had to have that in your head at all times. And as an investor, I've actually got in an elevator with a potential company to invest in and asked them what they did. And they managed to get, within the 20 seconds between floors, they managed to get their story mostly out with a couple of clarifying questions. And I would have invested, but they didn't need money because, they were too good. So how many of the companies that you heard about, who would put your hand up if you would invest in that company, assuming you had the money? Okay. We've got a few. Okay, so over here in the black, what was the company? Can we get let's get a mic, sorry.
They provide tailored communication solutions to customers all around the world. And so they have to integrate and understand each customer and each country's unique needs. And it sounds like they nailed it, really.
Mm-hmm. What's their revenue?
We're not that's a secret.
Okay, fair enough.
Yeah.
So you got to be a bit unafraid of asking these questions, because sometimes that just nails it. They say, oh, it's 200 grand. You're like, oh, that's interesting. If they say, oh, it's 200 million, you say, yeah, you've nailed it. And I'm guessing it's in between. Okay, someone over here. Someone over here put their hand up, okay. What was the company?
So they are making an IoT solution for pasture management, and he made me want to be a farmer the first time around, so I thought I'll chip in. They're quite small still, so they're starting to try and reach a global market, so there's quite an opportunity to do that with different systems of economics around the world, and because they don't have a lot of revenue at the moment, it's a quite small risk and reward.
So why would they win?
I think they thought about end users. They probably haven't nailed directly what the organization looks like and how finance looks like, but they figured out what the end users want and how they actually will work.
And so there's a reason we start with end users, because if your company is pre-revenue, there's no sense thinking about the organization and the finance before you think about who's that end user, what do they need, how am I going to make their life better, and all that sort of good stuff. And then once you've figured it out, very quickly thereafter, you've got to say, well, how do I make money in this ecosystem? Right? Who's got the money? Linewise is a good example of a company where they said, well, we're trying to help protect schools, surround them with a barrier, as it were, to help protect what the kids see on the internet, and therefore we're going to charge the school. And Family Zone, the company that took them over, said, we'll give it free to the school, but we'll charge every single parent, because you can get a lot more money out of the parents than you can out of the school. So there's and Scott is here from Linewise now, Family Zone. And so there's quite a different way of operating there. And to my mind, Family Zone had a better revenue model and therefore will do better, which is why we sold. I'm going to wait to go the other way until the end of the talk, okay? You'll get your chance. So with companies, the confidence-competence chart, you've actually got a line in there. It's the revenue line. And you can play above or below that line when you're talking to customers and investors and so on. But that is the one true measure of how well you're doing. As you get bigger, there's another line that pops up, and that's called EBITDA, or profit, or cash generated, which gets important as you get bigger. When you're talking to investors at the zero end of the stage, the best thing you can do is walk out of the room and go talk to some customers and sign some deals. Because it's so much easier to talk to investors if you've got some money. But if you've got some money, you don't need to talk to investors. And before you say, but that's too hard, I need CapEx, I need to go develop a product, I need to buy some machinery, I need to build a plant. Before you say that, think about the housing construction industry, or the commercial building industry, or the consulting industry, or even the building of aeroplanes industries. All of these folks sell products that don't exist. They take money up front, many of them, and then they go off and build the thing or deliver the service later on. So there's no reason why your startup, based on a few bits of paper, can't actually get MOUs signed, can't actually get conditional contracts signed, can't actually get a little bit of money up front signed. And fight like heck to do that, because it makes your journey so much easier. Raising money from investors sucks. The middle bit of this chart is that venture capital stage, where you're $500,000, $1 million, $2 million, $5 million of revenue, growing really quickly. That's a really sweet spot for investors. Unfortunately, in New Zealand, as I'll show you in a second, we don't have many of them in that space. And then when you get really big, you're starting to get into the place where banks will give you money, where stock markets will talk to you, where private equity companies will talk to you. So if you look at, just before I go on that top left-hand side is the kind of amusing side of the investment game. And you can put in whatever the bullshit is of today in there. So the dot-com boom, there's a whole lot of B2B marketplaces. Now it's probably blockchain that you'd put up there. On the bottom right-hand side, these are the companies you never hear about, because they're just sitting there making zillions of dollars, and they're not going to tell you about it because until they maybe pop up and sell themselves, like we saw with Sistema last year. $660 million for a company whose products we all used. We hadn't really thought about what it was worth. So as investors, you'd think we'd be reading these sorts of books, and these books I highly recommend. It's all about holding for the long term, investing in growth, having a margin of safety between how you buy and where you think you're going to sell. Big end-of-town investors tend to think in terms of asset allocation. So I've put two up here. One is the Yale Investment Office, which is a world leader in investing in private equity and venture capital, which ends up in companies like ours. And the other one is a super fund who basically put all their money into stocks and bonds around the world. Yale got 25.5% annualized return over 20 years for their venture capital investment. Now, Yale's the best venture capital fund that's investing in other funds around. They get to access the best funds. So they're only getting 25%, and that sort of flows back into what the VC funds themselves and how they're structured and what deals they're looking for. In New Zealand, we've got a whole bunch of people on the left-hand side who are looking at early-stage companies, no-revenue companies, and they're characterized by a lot of them losing a lot of money for investors. It's a place that's fun to play in, and maybe it's the only place you can afford to play in as an investor if you're an individual. but it is a place where a lot of money is lost. On the right-hand side, and some now and then, some people get a lot of money. People that invested in TradeMe, people that invested in PushPay, they've all done very well, right? On the right-hand side, private equity. This is for stable companies, high revenue, and they're looking for EBITDA and cash flow, and they're looking to lever that up a little, grow the company, and then maybe sell it a bit down the track. And in the middle is kind of an empty space, which is a problem because we need a few more $100 million each year going into that space, investing in companies of between $500,000, $10, $20 million revenue a year. And we just don't have it. So at Punakaiki Fund, we're trying to be part of that fight. It can't be one fund. We need a bunch of them in there, and we're trying to do our part. The books that a lot of those investors on the left-hand side sometimes feels like they're reading are more like these. I would encourage them to read the books that I showed. The problem with folks that read those sorts of books and are thinking about, Think and Grow Rich and making money your hobby and cash in on the coming real estate crash. Actually, that one might be true. If the dot-com boom, the problem with those books is that those sorts of investors have ridiculous expectations. They expect that this is Facebook they're investing in. They expect that their advice that they're giving is going to be golden and treasured. They expect that this needs complicated contracts and months of negotiating. And New Zealand is definitely getting better at that. We're moving up the food chain and towards more professional investors who provide help when required or no help when required, and who embrace the bigger end of town investors from offshore or other funds in New Zealand. What we don't have in New Zealand, as I just said, is that transformational money where you put the big $50 million check down. We just don't have it yet. So now, given all that, it's just fodder, I wanted to go the other way, right? So the person on that side is going to tell the person on this side about their business, and they've got 30 seconds to do so. And I'll just go back to the slide so you can get your cheat sheet. There it is. Okay, let's stop it there. Who's going to invest? Who's going to invest? I'm giving you money. Here's free money. Who's going to invest? No one. Someone over here, one over here. So I am out of time. I think, is that right? Yep. So we're going to leave it there. So what I would encourage you to do as you're talking to other people today over water and stuff is use something like this, a framework to talk about your company. And this is the magic. This is how you get in front of investors. Show that you can do each of those 4 things really well, and it's really easy to raise money. That's all I have to say to you today, really, and that's distilling down the essence of how do you get money out of investors. Show them that your company is awesome, and tell the story in a structured, simple manner that helps the investor understand that they can't not make money out of your company. Thank you. Sure.
Yeah. We've had a couple of questions come through, and one I thought that might be good to ask Lance while he's on the stage is, who would you invest in right now from New Zealand if you could choose any company?
Punakaiki Fund is obviously the best place to place your own money. Our first port of call is actually our own companies, the 20 that we've invested in, or 18 I guess left, and principally we're looking at 5 or 6 of those that are raising right now. $3-5 million each, for $2 million, that sort of stuff. But I think in New Zealand we do very well B2B software as a service companies, in particular, where the B is small or medium size. We don't sell to enterprises very well, although we're getting better at it. And we are very, very good at creating these very lean, tight companies and then holding on that sales machine that cranks up the sales through the world. Xero, Vend, Timely, Conquer, there's a whole raft of them after Timely who are at the sort of 2 million plus mark. Many of them we've never heard of. So those are the ones that are really investable right now.
Awesome. Thank you.
Okay, thank you. What was the other question?
Would you invest in a copycat company with no unique proposition but space in the market?
Yeah, so we did one set, which is New Zealand only. It's a copycat, geographically constrained, therefore has a defendable niche.
Yep.
Yep.
Perfect.
Okay.
Okay.